This video is for educational purposes only and is not financial advice. Always do your own research and consult with a financial professional before making any investment decisions. Did you know that 90% of millionaires have built their wealth through real estate? Today, we're going to break down the BRRRR Method, one of the most effective strategies for quickly building wealth through real estate, and explain how you can use it to grow your portfolio faster than you thought possible. The BRRRR Method is gaining serious traction in the real estate world, and for good reason. This method, buy, rehab, rent, refinance, repeat, allows you to build wealth rapidly while minimizing some of the risks and challenges of traditional investing. Let's break it down, step by step, so you can start implementing it yourself. Many investors face significant hurdles when trying to build wealth, whether it's the high cost of entry, the time it takes to see returns, or the lack of control they have over their assets. If you've invested in the stock market, for example, you may have felt the frustration of watching your portfolio dip during market volatility, with little recourse to manage your exposure. Even in real estate, upfront costs can be prohibitively expensive, and many investors feel stuck or unsure how to scale their investments effectively. Another big challenge is liquidity. When you invest in long-term assets like real estate or mutual funds, it's not always easy to access your money quickly without facing penalties or losses. The BRRRR Method provides a solution to these challenges by offering a repeatable process that allows you to maintain control over your investments and reinvest the returns into your next opportunity. Now, let's take a closer look at how each phase of the BRRRR Method works and why it's so effective. Buy. The first step is to purchase a property below market value. This could be a foreclosure, a fixer-upper, or even a distressed property. The goal here is to find a deal where you can add value through rehabilitation. For example, let's say you find a property listed at $80,000 in a neighborhood where similar homes sell for $120,000 after renovation. You've already got built-in equity, which is key to making this method work. Rehab. After purchasing, it's time to renovate. Focus on value-adding improvements, like upgrading kitchens, bathrooms, and curb appeal, which will significantly increase the property's market value. For instance, if you spend $20,000 on renovations, but the property is now worth $140,000, you've significantly boosted your investment potential. Rent. Once the rehab is complete, rent the property to generate steady cash flow. Rental income helps offset your mortgage and other property-related expenses. For example, after rehab, you might be able to rent the property for $1,500 a month, which provides you with a steady income stream. Refinance. Once you've built equity through rehabilitation and rental income, you refinance the property to pull out some of that equity. The goal here is to take advantage of the increased property value to refinance and take out cash. For example, if your property is now worth $150,000, and you refinance at 75% loan-to-value, LTV, you could pull out $112,500 in a cash-out refinance. This is the money you'll use to fund your next property. Repeat. Use the cash from refinancing to repeat the process and purchase your next property. This repeatability is what makes the BRRRR Method so powerful. The faster you cycle through this process, the quicker you can grow your portfolio and generate wealth. One of the most important aspects of the BRRRR Method is doing your due diligence at every step. It's essential to research neighborhoods, understand market trends, and estimate rehab costs accurately. Over time, these skills will allow you to scale your investments while minimizing risk. Let's look at a real-life example. Jessica, an investor, bought a $100,000 property, spent $20,000 rehabbing it, and rented it out for $1,400 a month. After 6 months, the property appraised at $160,000, and she was able to pull out $120,000 through a cash-out refinance. She used that money to buy 2 more properties, continuing the process. In 3 years, she went from 1 property to owning 5, each generating rental income and appreciating in value. This success story shows how the BRRRR Method can accelerate your wealth-building journey, especially if you're strategic about finding the right properties and managing each step effectively. To recap, the BRRRR Method offers a step-by-step strategy for building wealth quickly through real estate. By buying underpriced properties, rehabbing to add value, renting to generate income, refinancing to pull out cash, And repeating the process, you can scale your investments and achieve financial freedom faster. I hope this video gave you a solid understanding of the BRRRR method. Have you tried this strategy, or are you planning to? Let me know in the comments below. Don't forget to hit subscribe and turn on notifications so you never miss out on our next wealth building tips. Stay tuned for more strategies to help you grow your portfolio.